The world is running out of silver, not in 50 years, not in 20, now. And the price you see on your screen, that number flickering in the low 30s, is a lie. A carefully constructed, meticulously maintained lie that is about to shatter against the immovable wall of physical reality. Because here's what they don't want you to understand. You cannot print silver. You cannot digitize it into existence. You cannot create it with a keystroke in a Federal Reserve basement. And when demand exceeds supply, not by a little, but by hundreds of millions of ounces, there's only one mathematical outcome: price explosion. This isn't speculation. This isn't hope. This isn't some gold bug fantasy whispered in dark corners of the internet. This is mathematics. And mathematics doesn't care about JP Morgan. It doesn't care about the COMEX. It doesn't care about paper derivatives or naked short positions or any of the elaborate financial architecture designed to convince you that silver is worth $32. We are entering stage 3 of a pattern so old it predates America. It predates the British Empire. It predates Rome, but Rome understood it perfectly right before Rome collapsed. Stage 1, monetary stability backed by precious metals. Stage 2, expansion, debasement, price suppression. Stage 3, the crisis, the trigger. The moment the paper illusion meets physical reality. Stage 4, the reset. Stage 1, check. Stage 2, check. Stage 3, happening right now. As you watch these words, and the trigger has a name. They call it the solar death spiral. And it makes $50 silver not a ceiling, but mathematically impossible. Let me explain what makes silver different from every other precious metal on Earth. Gold is money. It always has been. It sits in vaults. It transfers from a generation to generation. The gold that Cleopatra wore around her neck still exists somewhere on this planet. Every ounce of gold ever mined in human history, roughly 200,000 tons, is still here. Recycled, remelted, passed down. Silver is different. Silver disappears. When silver goes into a solar panel, it doesn't come back. When it's used in medical equipment, in electronics, in missiles, and batteries, it's consumed, gone, atomized into products that will never be economically feasible to recover. The silver in your smartphone? You'll never see it again? The silver coating the contacts in your electric vehicle? Dispersed into landfills across the globe, gold is stored, silver is destroyed. And here's where the mathematics becomes terrifying. Solar panel demand alone has exploded from 85 million ounces annually to over 200 million ounces. That's not a gradual increase. That's not a trend line you can project and plan for. That's a vertical spike driven by something no market force can stop: government mandates. The European Union has legislated solar adoption. China has mandated it. The United States has subsidized it into inevitability. Every major economy on Earth has committed, legally, financially, politically, to a green energy transition that requires silver. There is no substitute. Engineers have tried. For decades, they've searched for an alternative to silver paste in photovoltaic cells. Copper doesn't conduct efficiently enough. Aluminum degrades too quickly. Every attempt to replace silver has resulted in panels that produce less energy, fail faster, or cost more to manufacture. Silver is irreplaceable. And the world has decided, not asked, decided, that it will consume more of it every single year for the next 3 decades. Now add electric vehicles. Every EV requires roughly 1 to 2 ounces of silver. Every charging station, another ½ ounce. The global EV market is projected to manufacture over 40 million vehicles annually by 2030. That's 80 million new ounces of demand, minimum, that didn't exist 15 years ago. Now add 5G infrastructure. Every tower, every antenna, every component relies on silver's unmatched conductivity. Now add military applications, missiles, radar systems, satellite components. Silver is a strategic metal, and every major power is stockpiling it. Total industrial demand, over 1 billion ounces annually. Total mine production, flat, 800 million ounces, maybe 850 in a good year. Do the math, demand 1 billion. Supply, 800 million. Deficit, 200 million ounces every single year. And the deficit isn't shrinking, it's accelerating. Because you cannot legislate silver into existence. You cannot mandate mines to produce more when the ore grades are declining. You cannot force the Earth to surrender what it doesn't have. This is the solar death spiral. More solar mandates mean more silver demand. More silver demand against declining production means higher prices. But governments won't abandon their green commitments for a price spike, so they'll mandate more solar, which means more demand, which means higher prices. The spiral only moves one direction, and at the center of that spiral isn't $50 silver. It's something much, much higher. If you think this sounds extreme, if you think surely the markets would have priced this in, then you don't understand what markets have become. You think you're trading silver when you buy SLV or COMEX futures contract. You're not. You're trading a promise, a piece of paper that says someone, somewhere, might have silver that they might deliver to you if you ask nicely and wait long enough. For every 1 ounce of physical silver, there are 100 paper claims. 100 people who believe they own the same ounce of metal. This is not a market. This is a game of musical chairs where 99 people don't realize that there's only one seat, and the music is stopping. Watch the vaults. Not the price, the vaults. London's LBMA vaults have been draining at record rates. Registered silver at the COMEX, the silver actually available for delivery, has dropped by over 60% in 3 years. Shanghai's vaults are being emptied by Chinese industrial demand that doesn't care about paper contracts. The metal is leaving, and when enough metal leaves, something happens that paper traders dread. Something that's already beginning to appear in the data: backwardation. In a normal futures market, prices rise as you go further into the future. Pay more for silver delivered in 6 months than silver delivered today. That's called contango, the normal state of commodity markets. But silver has begun to flip. Spot prices, what you pay for silver right now, delivered immediately, are climbing higher than future prices. Why would anyone pay more for silver today than silver tomorrow? Because they're not sure there will be silver tomorrow. Backwardation is the market's panic signal. It's the flashing red light that says the physical metal is disappearing, and people are paying premiums to get it now because they don't trust future delivery. And who do you think is taking the other side of that trade? Who's accumulating physical silver while everyone else plays with paper derivatives? JP Morgan. Let's talk about the elephant in the vault. In 2020, JP Morgan paid nearly $1 billion to settle charges of manipulating the precious metals market. Spoofing, layering, a decade of illegal trading activity designed to suppress silver prices. The bank paid the fine. They didn't stop accumulating. JP Morgan holds an estimated 169 million ounces of physical silver. That's not a paper position, that's metal. Real, allocated physical bars sitting in vaults with JP Morgan's name on them. That represents roughly 9% of total global supply. Or, if you count only above ground, accessible silver, the stuff that could actually be sold, they control nearly 45%. 45%. Now ask yourself a question. JP Morgan didn't build a 170-year banking empire by being stupid. They employ more quantitative analysts, more market strategists, more economic forecasters than most governments. They see the same supply-demand data we just discussed. They see the solar death spiral accelerating. Why would the world's largest bank accumulate nearly half the world's accessible silver supply if they expected the price to stay suppressed forever? They wouldn't. They're positioning for the reset. The suppression isn't meant to keep silver cheap indefinitely. It's meant to keep silver cheap long enough for the smart money to accumulate. And when the accumulation is complete, when the vaults are drained, when the paper contracts can no longer be rolled over, when backwardation becomes permanent, the same banks that suppressed the price will let it explode, because they'll own the physical, and everyone holding paper will own nothing. This is not conspiracy, this is strategy, and it's happened before. 1980, two brothers from Texas, Nelson and William Hunt, attempted to corner the silver market. They'd watched the dollar come off the gold standard in 1971. They'd watched inflation ravage the purchasing power of American currency, and they decided silver was the answer. They were right. For a while. Silver climbed from $6 to nearly $50. The Hunt brothers became billionaires on paper. Magazines wrote about them. Economists debated them. For one shining moment, it looked like two men had beaten the system. Then, the system changed the rules. The COMEX, the same exchange that exists today, suddenly raised margin requirements. Not by a little, by multiples. The Hunts had bought silver with leverage, with borrowed money. And when the exchange demanded more collateral than they could produce, they were forced to sell. Silver crashed. The Hunts went bankrupt. The lesson everyone took: you can't beat the banks. But that's the wrong lesson. The real lesson: leverage kills. Paper kills. The Hunts didn't fail because silver was a bad investment. Silver went from $6 to $50, an 800% gain. The Hunts failed because they bought their silver with debt, and when the rules changed, the debt destroyed them. But here's what nobody talks about. The people who bought physical silver, coins, bars, actual metal in their possession, and held through the crash, they kept their gains. They didn't owe margin calls. They didn't face forced liquidation. They held metal, and metal doesn't default. Physical holders won. And the setup in 1980? Two billionaire brothers against the banking system. The setup today? Nations. China has been accumulating silver at rates that don't appear in official statistics. India's silver imports have broken records year after year. Russia, despite sanctions, continues to stockpile precious metals. This isn't a couple of Texans making a speculative play. This is the largest economies on Earth positioning for a monetary reset. The Hunt brothers were a warning. Today's accumulation is a verdict. There's a concept in economics called the Minsky moment. Hyman Minsky was an economist who studied financial crises. His thesis was elegant and terrifying. Stability breeds instability. The longer a system appears stable, the more risk accumulates beneath the surface. Debt builds, leverage increases. Everyone assumes tomorrow will look like today because yesterday looked like the day before. And then, suddenly, without warning, the system breaks. The Minsky moment isn't a gradual decline. It's not a controlled correction. It's the instant when confidence evaporates and everyone rushes for the exits simultaneously. We've seen it before, 2008. The subprime mortgage market seemed fine until it wasn't. Lehman Brothers was solvent until it wasn't. And within weeks, the global financial system stood on the edge of complete collapse. The silver market is approaching its own Minsky moment, not because of mortgages or credit default swaps, because of physics, because of mathematics, because 1 billion ounces of demand cannot be satisfied by 800 million ounces of supply indefinitely. The paper market has absorbed the imbalance. Futures contracts, ETF shares, derivatives layered upon derivatives. 100 paper claims against every real ounce. But paper markets require faith. They require the belief that if you want your silver, you can get it. The moment that belief cracks, the moment enough participants demand delivery simultaneously, the paper structure implodes. And what do you think happens when the COMEX announces force majeure? When they settle contracts in cash because there's no silver to deliver? Cash settlement. They'll give you dollars, devaluing, inflating, increasingly worthless dollars. They'll tell you the market is functioning perfectly because you got paid, but you won't get silver. And the people who hold physical, real allocated metal outside the banking system will watch the paper price become meaningless because price discovery will move to the physical market, the real market, the market where actual silver changes hands. And in that market, the price won't be $50. Let's do the math on $50. In 1980, silver hit $49 and change. Adjust that for inflation, real inflation, not the manipulated CPI numbers, and you get somewhere around $194. That's what $50 silver in 1980 means in today's money. But in 1980, there was no solar death spiral. There were no electric vehicle mandates. There was no 5G infrastructure. Solar panels were a curiosity, not a global energy strategy. In 1980, total silver demand was a fraction of what it is today. And still, the price hit 50. Today, with demand through the roof, with supply flat or declining, with vaults draining and backwardation appearing, you're supposed to believe that $50 is the ceiling. $50 isn't the ceiling. $50 is the suppressed price. The artificial lid maintained by paper derivatives and unlimited short selling by entities that never intend to deliver metal. When that lid comes off, and it will come off because it must come off because mathematics always wins, the price won't stop at 50. It won't stop at 100. The rebalancing of paper claims against physical reality will drive silver to levels that seem absurd today. $200 is not a fantasy. It's the inflation-adjusted level from 1980 applied to demand conditions that dwarf 1980. And if you think 200 seems extreme, consider this. The amount of currency that will be printed to manage the next crisis, the sovereign debt crisis, the pension crisis, the dollar crisis, will make 2008 look like a rounding error. What's the price of silver when trust in fiat currency collapses? When central banks are printing trillions per month? When the entire global monetary system searches for something, anything, that can't be created by a bureaucrat's decree? The number stops mattering. What matters is, do you have the metal or don't you? Stage 4 is coming. The pattern has played out so many times in history that ignoring it requires deliberate blindness. Rome debased its currency until the empire fractured. Weimar Germany printed until wheelbarrows carried worthless marks. Every fiat currency in history, every single one, has eventually returned to its intrinsic value, zero. The dollar has lost over 98% of its purchasing power since the Federal Reserve was created. That's not a conspiracy theory. That's Federal Reserve data. 2 cents left. And the rate of debasement is accelerating. What happens when confidence breaks? When the world looks at American debt, 35 trillion and climbing, and decides the full faith and credit of the United States is a bad bet? It happens fast, faster than anyone expects. And when it happens, you won't be able to buy silver at any price in paper terms. Because sellers won't want paper. They'll want something real. This is not financial advice. I'm not telling you to bet your mortgage on silver futures. The Hunt brothers tried that. It didn't end well. I'm telling you to understand the pattern, to see what's coming, to position yourself outside the system that's about to break. Physical silver, metal you can hold, metal stored outside the banking system where it can't be confiscated, can't be rehypothecated, can't be settled in cash and taken from you. When stage 4 arrives, and the mathematics guarantee it will, the people who saw the pattern will be on one side of the greatest wealth transfer in modern history. Everyone else will be on the other side, watching, wondering, asking how they didn't see it coming. The solar death spiral is accelerating. The vaults are draining. The paper claims tower above a shrinking base of real metal. The Minsky moment approaches. You've seen the data, you've heard the history, you understand the mathematics. The only question is, what do you do with what you know? Don't be everyone else. See the pattern and act accordingly.